Hello and welcome to Bell Financial Group's From the Helm series. I'm Grady Wulff, Senior Market Analyst with Bell Direct and Bell Financial Group. Now, what a time to be in gold, and there's no better time to talk to a CEO in the gold space than Jeff Quartermaine of Perseus Mining. Right now, it is the time to be in gold, and I think the outlook is still very strong, tailwinds for the bull run to continue. Jeff, thank you so much for joining us today.
Thank you for having me.
Now, for our investors who may not be familiar with the Perseus story, I'm sure there's not many of them, but can you just tell us about an overview of the company and what you're up to these days?
Okay, well, we started as a junior explorer, like a lot of people.
Yeah.
And, went and found our first deposits and then moved through the development cycle where today we've now got 3 operating mines. We're building a 4th. We have another, very good property available to us, and we're travelling pretty well.
Absolutely. Now, operating in West Africa is similar, different to Australia. Tell our investors about what are the similarities and differences and what you have found with operating over there, given it is known for gold.
Okay, well, we are operating in West Africa, but we're also located in East Africa as well, I should say, and a little in the north. Now, it's fine. In fact, there's a lot of advantages in being in Africa relative to Australia. One of the things is that we can get things done fairly quickly.
Yeah.
And recently I was asked about, the fact that one of our peers here in Australia struggled to get a property up after 10 years.
Wow. In
that same period of time, we licensed and developed 3 mines. So wow. I think it puts it in perspective that, the African continent is very varied, a lot of different countries, et cetera, but you can get things done.
Yep.
And there's some fantastic geological resources there and some brilliant people. And, by using all of those things, we can actually, do quite well for all of our stakeholders.
And given your timing right now, you've just released the 5-year production outlook plan. Can you tell us about the significant highlights of that and what you're most excited about?
Yeah, well, look, it was an interesting thing. Most people don't do this.
Yeah, I haven't really seen one before.
And in fact, they're not required to. But the reason that we did it was this, is that Perseus trades at a very significant discount to our peers, both in Australia and globally. And we've been struggling to understand why that would be the case. There were a couple of reasons have been put forward. One was the African discount thing, which I understand why people say those things. Yeah. But the other was there was this mistaken belief in the market that Perseus was about to fall off a cliff, that we'd had 4 or 5 very good years and that our production base was running out. And what we wanted to demonstrate to the market, that far from that being the case, we have a very, very strong future ahead of us. And that 5-year outlook that we put out the other day is based on reserves that we currently own.
Yep.
So we don't need to buy anything. We don't need to discover anything.
Wow.
What we need to do is just simply mine and process that ore, and we will deliver that plan. Now, some people said, well, that's all very well and good, but where's the excitement here, folks?
Oh, I'm shocked.
Well, the thing is this. What I've said to people is this. Look, if you think that Perseus will sit on its hands for the next 5 years with a war chest like we have and do nothing, then you're ignoring history, because over the last 5 or 6 years, we've grown our resource base significantly through the drill bit. And when the opportunity has presented, we've made some fairly judicious acquisitions in the market. We've done 4 takeovers in the last 5 or 6 years. So I think you can expect some more of that going forward. And what will that result? Well, I think what it will result in is significant growth in the business, but also significant creation of benefits for all of our stakeholders, not just shareholders, but all of our stakeholders.
Yeah, absolutely. Now, talking on the growth front there, you did mention that you have growth opportunities, but talk to us through about the final investment decision coming up, or that you did in January, to develop the underground CMA mine, and obviously the other 3 you have in operations, and then a further one in construction. Talk to me about all your assets and where they're at.
Well, look, certainly the decision on the underground was taken early this year, and we're about to start cutting portals any day, basically. So that's extremely exciting. Burncut is the underground contractor that we're using. And what we're basically doing is going off the side of the CMA pit, which was the main source of ore at Yaouré for the last 4 or 5 years, and just driving down following the trend. So that's a very exciting exercise, and it's going to extend the life of that property by, well, at least 11 years based on the reserve today, without drilling another metre of drill. So I think that we've got a very decent future ahead of us there.
Yeah.
Nyanzaga is the other property you mentioned, and that's the one in Tanzania.
Yeah.
And we took an FID on that on, I think it was April 24 or 25, something like that. But since then, we've been going full steam ahead, and And that project is really starting to take shape.
Yeah.
And I've got to say that I've been in this business a long time, but the Nyanzaga project is in very good shape, and I think is going to be extremely exciting to all of our shareholders in future years.
What grades are you seeing there?
Well, this is an interesting question. I mean, the grades at the present time are in the high ones, as it is 1 to 2. But we've been doing a lot of drilling. We did the final investment decision based on the first phase of drilling, and we had, I think it was 2.4 million ounces in reserve. We're now well into the second phase, and we'll be coming out with an updated resource reserve statement early next year, and that will materially increase it. But what has been also happening is that we've been drilling at depth below the bottom of the pit, and I can say the results that we've been receiving are extremely exciting, and I'm encouraging my team to put out a release to the market in the next few weeks. So watch this space, folks. It's encouraging. Now, at this stage of the game, it's very early days, but what it does say to us is that there's an opportunity there potentially for that Nyanzaga project to be around for 20 years or so once it gets going. It's a very interesting deposit.
So long life, tier 1, ready to go.
Well, tier 1, tier 2, whatever, however people like to describe it. But for us, a long life, relatively low cost operation is what we're seeking.
And low cost is what is known in Africa, so that generally...
Well, yeah, I mean, we've been able to keep our costs down, very successfully over the years. In fact, it's quite interesting if you look at our Edikan mine in Ghana. We're producing at about the same cost today as we were doing in 2011, 2012.
Wow.
The difference is, of course, that the gold price is now $3,300
so your margin
US.
Expansion.
The margin has expanded enormously, yeah.
Wow. So elsewhere in the growth front, you have a 17.9% stake in Predictive Discovery. How does this play into your strategic outlook, and what do you see from the investment?
Oh, well, look, we invested in Predictive. We switched in investment from Montage into Predictive. And, we're interested in what they're doing there. Guinea looks like an interesting country, but until we can convince ourselves that that the company is worth what it's trading for, then we'll just simply sit back and watch. And we're in no hurry, and we'll see what happens.
You've got a lot going on anyway, but you did mention that you have made some serious acquisitions recently. M&A is really hot in the market right now. How does this play into your strategic outlook?
Oh, well, when you say it's hot, I think it's hot in the eyes of maybe investment bankers more so than people like us, because, no, to be frank, at the present time, the companies are very well valued.
Yes.
And, that's okay. But our business is monetizing mineral resources, and we have to be very careful that we don't overpay, because we seek to generate a return on the funds employed.
Exactly.
So for the time being, I think M&A we're going to struggle in that front. But look, things come and go. There are cycles, and what we have to do is to stay awake at the wheel and stay prepared to act when the opportunity arises, and not to feel that we have to be under any pressure to do silly things.
Yeah, and as you mentioned, valuations are creeping up there at the moment. So you are well known in Perseus for your capital management. You do have a very strong balance sheet and good funds in reserve. What are you going to do with them? Deploy them into dividends, buybacks, anything like that?
Well, we're doing all of those things at the present time, and we've been doing it for a while. But no, look, what underpins our capital management is three things. Firstly, we have to invest to keep our operations running and generating the outcomes we're seeking. That's the first thing. The second thing, we have to make sure that our balance sheet remains resilient under all operating conditions. And then the third thing is we have to use what we're calling discretionary capital. And there are two primary uses. One is growth, future growth. The other is return to shareholders.
Yeah.
Now, we've talked about the growth piece, but in terms of the return to shareholders, we have been paying dividends for some time. And last year, for the first time, we put in place a share buyback. It is interesting. We have shareholders all around the world, and when I talk to shareholders and ask them how they like to receive their money, do you want dividends or do you want buybacks? It seems to me that an increasing proportion of the shareholder base like buybacks as opposed to, and I can personally understand that, because as a shareholder myself, and I get a dividend from Perseus, I've got to pay tax on it here in Australia. So, we don't have double tax treaties with the African countries, so we can't frank the dividends. Which means that, perhaps a better way of returning money is through the buyback, where we can maintain liquidity in the market, and we contain a floor under the stock price.
Yeah.
And people know that if they want to sell, then they can actually get off the stock.
Absolutely. Now, sustainability is a big thing at Perseus, and it's something in mining that a lot of investors want to know about. And your approach is you're constantly talking about having a social license to operate. Can you talk me through that and why it's so important?
Well, actually, this whole ESG push that has become popular in recent times is quite interesting to us because we've always been doing those things. That's been part of our DNA from day one. And essentially, you know, we see ourselves as good corporate stewards. So obviously we're going to look after the environment. Obviously we're going to govern according to the laws of the countries we operate in. But it's the S piece that is super important. And you know, for us, we recognise that unless we're welcome by our host, we don't have anything. We might have the best deposit in the world and the most money and the smartest people, but unless we're welcome in these countries and these communities, well, we're going to struggle. So we do invest a lot of time working with host communities and working with host governments to make sure that everybody gets their fair share of the business.
Absolutely.
And that's it in a nutshell. You know, everybody deserves to get, you know, their fair share. And the tricky part is, of course, is figuring out what's fair.
Absolutely, and understanding how to operate across the world, not just in Australia.
That's right.
And finally, what can investors expect over the next 12 months on a news flow front, and why are you so excited?
Well, look, we've got a lot of stuff coming out, actually. I mean, we've got the quarterly report being released fairly shortly, and I think people are going to be very happy once again on what we're doing there. Yeah. We have hopefully we'll have an announcement around some exploration results. We have our full year financial results coming out in August, which will carry as part of that a final dividend and share buyback news, et cetera, et cetera. And look, we're making great progress on all of the sites. The underground, we talked about the underground, Nyanzaga. You know, those things are pushing ahead, and we'll keep people informed as we go forward on that. And I think it's more of the same. You know, we're going to keep producing. One of the things about Perseus that we take very seriously is we do what we say we're going to do.
Great.
We gave you a 5-year outlook, and you can expect to receive at least that, but probably more.
There's nothing better for investors. Jeff, thank you so much for your time today. One to watch for the watch list or even invest in 2026 is obviously Perseus Mining. Thank you so much for joining us today. And I hope you enjoyed that episode of From the Helm as much as we did filming it. If you did, be sure to subscribe to our YouTube channel to stay up to date with all market commentary, insights, and exclusive interviews with CEOs.